Hey everybody, welcome back. We have a lot of ground to cover. So I just want to show you this on the S&P through the SPY. And I'm showing the SPY just so you can get a better understanding of what retail is going to look like tomorrow instead of really looking at what we're going to see on the ES. Obviously, we're going to go to the ES in a minute, but you have a hammer. And I think this is really important because I'm going to show you a couple patterns out here where we have hammers. And then you kind of go and take a look at this close and go, okay, well, the close then was 494.35. And then you look at yesterday's and you were at 492.55. And then you realize that despite all the noise and all the nonsense and all the correction talk, and when we're sitting here waiting and I'm waiting for the regional banks to roll over, as I was mentioning yesterday, problems in REITs, I'm waiting for that. And then you realize that you're at a second all-time high close. It's something that's worth noting and paying attention to, like, hey, this is what happened. So I want to just pay one real close attention to this and just really get in here for a second. Again, I do appreciate that I don't have to spend the time editing these. You have no idea how much time that actually saves me and being able to get to the actual content, but let's get to it. So see this wick right in here? So now I'm getting wicks. Well, what are wicks? As we know, wicks are what? Wicks are price rejection. So when we start getting wicks, we need to be really cognizant of that. Why? Well, if we're rejecting on the bottom, we want to know why we're rejecting on the bottom, right? And what do I mean by that? Well, we're clearly rejecting, which means what? We don't have sellers. So I think it's warranted, especially when I'm about ready to go through earnings and what I saw today on some of these names. Now, are we seeing that the same way here? Yes and no on the NASDAQ. I'm staying with the Qs because that's what retail is going to look at like. So we kind of come across here and we know that there's a sell signal up here and we know that we have this divergence. Those divergences, we don't know when they're going to ring. And, trying to time them sometimes is probably not optimal way to, invest. So we don't really not trade because of them. We become cognizant of that, and we become really cognizant when our ideas don't have legs anymore, right? And we're all seeing that. I mean, we were all a lot smarter a week ago, right? When everything kept moving higher and higher, we would buy something and then it would kind of base and then it would go higher. And we're not seeing that anymore, are we? And we probably haven't really seen that across the board since probably this high, if we're being honest. So what do we have here? So we have Wick City right in here. We have this wick, and we did fill in, and we came in over the open, which I don't really like. And we did see that kind of peaky activity today, didn't we? Well, what do I mean by that? Well, before we get to that peaky activity, let's take a look at IWM. Well, why isn't this down? Well, that's a really good question because there's a lot going on in the banking sector. Even Yellen mentioned it today and said she's watching the banking sector and thinks it has something to do with REITs, which is actually frightening that she thinks that's what the issue is. But nonetheless, we'll have to get into that on a Saturday. I have too much to go over this evening. So we're starting to actually see what? A higher high here. All these really were somewhat in tandem, weren't they? Except for IWM, which did what? Well, IWM actually went higher today. Now, why did IWM go higher today? Well, TNX actually started seeing some bond buying today. Now, you can always look at TNX and you can always look at it when. You always want to just take a look at this. We're going to drop this in line form for a second here and just take a look at what happened around the 1130 level and see if you saw any action around there when you have a bond auction. You have a bond auction at 1 o'clock, and how did that go as well? So you have data points, right? You always want to see how you're acting at those data points, and maybe you can get some information from there and then overlay that with RTY and go, okay, is there anything there? And not really, not really anything that's glaring. I'll tell you what is really glaring to me is that 2:30 time frame, besides that being a dentist's favorite time of day. When we see this at 2:30, hopefully somebody caught that, but when you see this at like 2:30, what this is telling you is that this is when institutions start buying. Institutions, of course, buy all during the day, but they have like an average volume. So they want to act towards the end of the day because they really don't want you to know what they're doing. And you're seeing that. Now, I think that that's interesting, and this is why I left it in line form for a moment. But let's leave RTY on for a second, and let's go take a look at all our sectors before we drill into the next thing that we're going to pay attention to. And we'll get rid of all our demarcation lines and everything else in here. And what we're going to do is just drop this all the way back to, let's go to 930 here. And then just kind of look. Now, this is after hours as well because the RTY is in here. So maybe the move would be to just make this IWM and see if that cleans it up. And then we'll just make this regular trading and clean that up even more. And then let's just zoom in here and then go, okay, so what is actually happening here? Well, we're seeing PW, right? PBW, and the pot name's up. We're seeing solar up. We had ENPH this evening. We'll get to China's up. So we're having certain sectors move that we really haven't seen before. And what does that mean? Well, we're seeing the same thing over again and over again, aren't we? We're seeing rotation. By the way, PBW is just a clean energy ETF. It's a little different than solar. So if you want to look at that, you can just go PBW and type in holdings into Google, and you could see what's in there. And then you kind of see how we're doing here. The pot names are moving. And what we're always doing here, for what I think is most pertinent, is just come down to wherever that zero line is, and you'll see that that zero line's down here. So on a day when the market's not supposed to be doing so great, look how many sectors were up. Okay, so this is kind of one of the reasons I always use a demarcation line at the end of the day and just want to look at the world and go, well, I'm expecting us to roll over. We're peaking. I've got a sell signal in DeMarc. I've got this divergence that's going on. What's going on? So I'm supposed to be rolling over. Instead, they're diversifying through all these different sectors. So I think that this is warranted, right? I can believe whatever I want to believe, but when I start to see this, it's something that I need to pay attention to. So are we going to have this big rollover, or are we going to go sideways and rotate through the sectors? And this is where it gets even more interesting. I think it gets interesting. So then I always break these sectors down into larger components, right? So I'll break them down into a 20 for example, and I'll look at a 20 with IWM, and I'll see where that's going, so that these are larger sectors more than what you just saw there, where they are subsectors more or less. And we'll just drop right here at the cloud demarcation line and go, okay, so what was under the zero? The NASDAQ, XLK, hardware, XLC, and the SOX. Everything else was up. Look at biotech today. Look at REITs today. You wouldn't think this, right? And then what we'll do is just take a look at the top 10 or 11 sectors and watch this. I just think it's very interesting when you take a step back, because you go into it and you start developing a belief, right? And as you develop those beliefs, that's fine. But you have to look at what's actually happening. Let's clean all this off for a minute, and we'll just get another one. And we'll just get to the zero line, which will be right around there, we'll say it. And there's the XLP, and you kind of see where you're at there. But we'll drop that all the way back here so that we are perfect. All right. So it's not perfect, but you get it. So then you look at this on the daily and go, okay, it's kind of interesting, right? You go back another 6 months and see how that's playing out. Drop this into a 1 minute, get a line on the 1 minute, go to 9:30, and just drop the demarcation line right there, okay? And that's just from 9:30 on where it all started. Okay, now drop that down to a zero line. What do we have? S&P's basically flat, XLP's flat, XLC and XLK underperforming, REITs are underperforming. What are they buying? They can't buy enough biotech. All right, so they can't buy enough biotech and they're buying REITs. Well, why are they buying REITs? This is, again, this tells you like this is where you follow the money. So who had shopping malls on their bingo card? Because I certainly didn't. So you look at SPJ and now SPG, sorry guys, it's been a long day trading. So then I look at SPG, and Goldman had a note on this morning, and I didn't really think, I'm just going to leave a 55 in. I used a 12, a 22, and a 55. You should use what you're comfortable with. But this is where it kind of gets neat. Their cash flow is through the roof. Way better than expected. Here, their cash flow was through the roof, way better than expected. They keep giving lower and lower guidance. I should say very conservative guidance. Not lower guidance, but they're giving very conservative guidance. Personally, I think they're doing it on purpose because the current environment that they're in. And can you really blame them when you're in this kind of environment and they're doing that? Basically, they just don't want to put themselves on the hook. I really don't blame them for doing that. I'm very surprised how this is holding, but you know, the 50, 55 level, that's where institutions buy. I don't think it gets any clearer, guys, than the past 4 or 5 days here, looking at this volume and look at what's happening here, that you have a net buyer, and you can see that in there. Now, this is, again, very different than what I'm waiting for, because I'm waiting for some kind of crack. And even today, when we were talking about Yellen's afraid because of office buildings and REITs, and, you know, you could see that. You could say that, you know, SLG's breaking that 55. I don't like what's going on. I'm going to be real clear about this from yesterday. I don't like what's going on with Evergrande, and now they have to liquidate some office buildings and some percentages of other office buildings in the world. I think it's going to be really ugly, quite frankly. But you start seeing like VNO and these names, they are breaking, but we're seeing the malls, they're the ones that are doing good. So that tells you again, right? Well, are people going to the malls? Well, they get revenue share, things like that. You start connecting the dots, right? You can start seeing why XLY might be doing what it's doing, why ANF has just been on a tear. You know, what are you seeing tonight? ELF is up again, right? So you start connecting these dots. It starts making a little bit of sense. Let's get back to SPG and what that XLRE is telling us. So we have this going on, and then you look at IWM's up. All right, so then IWM's up. Well, what's going on with regionals? Well, this is cracking, guys. Like, this doesn't get more obvious that you're cracking and that you have a problem. Now, I have a bias. I'm short. I've been short. If you've been following these videos for some time, we've been short this for some time, right? Since, I mean, it's been days, but we've been short it. I was actually long this and was a proponent of this name for some time. I was pretty clear about it the day that it happened. We actually got out pre-market. But nonetheless, this is where you're at, and this is what we're dealing with. So we shorted it. I actually shorted more today. I'm at $4. How long does this company stay around? Right? We all know why this company's here. It's not because of office buildings. For 20 years, if you go back, they beat earnings, right? Or they missed earnings, but you know what they never did? They never took a loss. If you go start clicking on all these, I'm not going to click on all of them for time's sake, and it's exhausting. But if you go through all of them, you never took a loss. And you took a loss here. You didn't take a loss because you wrote off some bad loans. You're taking a loss because of what you bought over here, which means that you have bad debt sitting on people's balance sheets, which means this BTFD, I'm not going to get into all this tonight, that is actually where they're borrowing and then paying the Fed back, and they're getting that arbitrage trade. That might actually be supporting more banks than we know of. And that might be why banks are even able to hit their numbers. We don't really have an answer to that yet, right? We don't know what happens in 3 months when rates stay the same, because they're not going to cut rates anytime soon, nor should they, when you're seeing companies like Race come out and exceed guidance, right, and have a 2-year backlog. Okay, should they be cutting rates when you're seeing that kind of stuff, when the consumer's that strong? We have guys in the room that were looking at Williams and Sonoma today, and they're right. Look at this name, and look, you're going out there, you're buying $300 pans. Here it is, hits the 55, bounces right off of it. You look at Louis Vuitton. Okay, so our consumer, they just came out and crushed compared to what they were supposed to be. So our consumer is way stronger than we're making it out, but we're seeing this divergence. So the question becomes, with these kinds of divergences, how bad does this get? Does it sell all the way down? I saw this in the comments, and I really wanted to comment on it when I saw it. Everyone was saying oh, I'm really glad that you're finally talking about that there's a crash coming. I'm not talking that there's a crash coming. I'm saying that you have a negative divergence between the issuances that are out there, and this has led to a top in the past. Now, whether that leads to a 3-month top or it leads to a 3-year top, none of us have a clue, right? What we do know is that the last time that we had a top in the NASDAQ that had a negative divergence like that was back here. We also know, and I'm not going to bring out the stool for time's sake, but we also know that during this period of time, we also had massive inflation. We also had 1.7 trillion injected in the market. We don't have that here. We just have participants, right? So we don't have the overhang that they did to us here versus here. So I don't know where we wind up. So the idea that we're just going to crash, and are we going to lose more banks? Again, I don't know that. I have a hard time believing it's one bank. I really do. I have a really tough time, especially when you see like VLY that got no play, no one's paying attention to, except now they're starting to realize that that's the next one. I have someone I was talking to that actually started shorting in here that understood this a while ago, or I should say 2 weeks before I did. It wasn't even on my radar. They were getting involved, and then as this started to come out, they were like, oh, that is the issue. And that's why this one's starting to drop as well. So to say it's one bank, no, it's not one, it's more than two. So we start going through all that, and what are we getting from all this, right? It goes back to when we just were looking at the sectors, right? See how it all ties together? XLRE is actually moving higher, but it's subsectors of XLRE. So what is that telling us? What can we get from that, right? Here's what we can get from that. Company-specific movements are still going to work. That's what we could take from it. And they are going to outperform the market. I'm waiting, and where my head is, I was thinking about this last night, because I'm always thinking about where am I going to be wrong? Like, what am I doing wrong? What am I not understanding, right? And there's always something. The one thing that's hitting me is I'm waiting for this broad-based sell down across the board. And maybe it's going to be more diversified, right? That doesn't mean that, NVIDIA is going to implode the whole way down, or maybe it does. Who knows, right? We can all argue that point, and I'll put out a poll, and I'll get 10 different answers, right? And one person will be right, and one person will be wrong, okay? SMCI is down 2% or 1.5% after hours. We'll find out where it's going to be tomorrow morning. For all we know, it opens up at 7.25, right? You look at that chart today, and you formed a hammer at the top of that. You almost have a dragonfly up there. You don't usually end with that kind of pattern. That's really rare for you to pull a top in with that. If we rallied and then closed at the low and you had a shooting star, which is where I thought we were going, I actually had puts on this today. They hardly moved until the end, and then I did exceptionally well with the trade. I have an AMD short that I was going to show, but I'd rather go through some of this so that you can understand where my head is. I think it's an important distinction. We need to focus on the company as well as the index, because you are going through a stock picker's market, because the Fed, while they have weight, they don't have the same weight they had 2 years ago. So, for example, when you're looking at names, like one thing Cam asked in the pre-market today, it was a really good question. It was very timely. What's the number one name that you're looking at shorting? And the number one name that I was looking at shorting today, and we did it in the community, and I think I have these up. Hold on one sec. I think I pulled these up so that I could pop them in so you could see this. I'm going to show these instead of the live trade. I'll show the live trade either tomorrow or the next day or show another live trade. But what I did here, and you can just see here, off the open, I actually shorted PLTR. I actually did well with the short, and then just got out of the way on the partial when it ripped up. But again, I have it all live; it's all time stamped. But right in here, you can see right around that 931, 932, we started shorting AMD spot. I got up $1, and then I just started trimming. It went against me, and I got out, cut 70% of spot for a loss. I think it's really important for people to know: cut your losers, hold your winners, right? And then here you can see we bought more SMCI puts. I think we did fairly well with those today. But the purpose of showing you that is so that you can see. Now, the whole time that that's trading down, what are we doing? All we're doing, this is John just posting this, we're going there. And this is me complaining about the puts. They're not moving. AMD low a day, still short, 164. So that was my target, 164 today. I thought that was really realistic for the trade. I know it seemed high, but once you broke that gap right there, that was pretty much it. So you always have your levels marked off before you begin your day. You see that first 5-minute bar comes right to that low, and then you just want to see what happens. So what I did with this trade, and I'll just walk through parts of it, but I want to walk through Cam's question because I think this is really important. So the question was, what's the number one short today? For me, it was semiconductors, but why? Because they are so overvalued, right, based upon the move. And I'm the guy out there telling you that NVIDIA is trading at 1 times PEG, right, PE to growth. And I'm talking holistically. Not all of them are going to make it, right? So when you're looking at something like, let's take an AMD, and your growth is 69 basis points quarter versus quarter, okay, maybe you shouldn't be trading at, a 200 PE or something like that. Like I'm not going to say stocks trade on PE, but valuation is out there, right? And people will look at that, and it becomes a self-fulfilling prophecy, right? That's why all this works. If people didn't believe in it, it's not going to work. So anyway, if we focus on these levels and we just pay the closest attention to what happened up here, and we go sideways and you get the bars, I'm just going to leave the 55 in. There's no rhyme or reason why it stopped at the 55. But so once we start breaking down, we're watching the levels down, 1, 2, out, and we're just trimming into them over and over again. And you can see this. Why did this work so well and not come back? Because this is not the one that has the growth rate. Okay, so what does this tell us? I'm glad you asked, because this is what it told us, besides giving us a great short trade that we did very well with. I said 64, we got to 165, 63, and we'll see what happens with it. But this is where this gets really important. So then you overlay NVIDIA, you overlay the SOX, you overlay the Qs, you overlay SMCI, and then let's get rid of these drawings. And for our purposes, we're going to get rid of the 55. So this is, hopefully you see how all this is tying together. So what we're doing now is we're using charts, right? We're using charts to determine where the money's going, okay? And by looking at this, this tells us what? Tomorrow, if we rally or sell off, what should you be doing? Okay, well, there's only one of these names that beat the NASDAQ today, right? SMCI, okay? Only one of them beat the NASDAQ today. Now, IGV is more of a thing for SMCI, and we could put that in there, right? Because they're not in the SOX, and whenever I put that in the SOX, everybody tells me that. So, okay. So here's IGV, which is going to match the Qs. But which one would you short? Well, which one couldn't get off the ground today? AMD. So if this continues again tomorrow, then what we would want to do is take a look and go look at AMD on the short side, and we would want to look at SMCI on rallies on the long side, right? That's how you would use this data tomorrow, okay? Just keep that in mind. I think that's really important, and that's something that anybody can do. And it's just a back of envelope way of saying, hey, where's the money going? Because again, you're not going to be able to move a market. I can't move a market. So what does that mean? Well, we have to follow the people that can move the market and kind of go with them. Remember, they're the sharks, we're the remora, right? That's how you have to think about it. You might not like that, but I don't really care. I mean, that's just kind of the way that it is, and you kind of have to be aware of that. That's how you're going to make money. Now, there's a bunch that happened after hours, and I'm going to go through a couple of them, not a lot, but VFC, just be aware of, this blew up, okay? It's not going great. It hasn't been going great for some time. They have brands. Apparently, nobody likes their brands, and the company's just blowing up left and right. This is probably going to be a dumpster fire tomorrow. FTNT, really solid quarter. If you take a look at it after hours, we're just going to drop one here on a 15-minute. We're going to put this extended in. And I think this is better time spent today versus me just showing you a trade that we did. We can always do those on Saturday, but at least you'll have some knowledge of what's going on out there. ELF absolutely did exceptional. And this is why it's so important that you follow along with some of this. So here, let's clean this off and let me show you what I mean when I say follow along. So one of the things I tell people to do, and a gentleman did it in the room tonight, was that's not where that belongs. Let's get rid of that. Make sure you get the newsletter. It's free. Link in description. I'll try to put it out there as well. Once you flip the anchored VWAP here, what happened? As soon as you flip the anchored VWAP, it put you in a position of what? That you could know exactly where you could get in that trade, and that's where they bought in here in the room, and they had quite a nice night out of it. So that's all they were looking for, was that level. And this is telling you exactly what you needed to do. Ford just did exceptionally well, but you only had that bar, and then that was it. Went sideways. ENPH was kind of the sleeper of the night. You got above the anchored VWAP. It was not good, but it also wasn't a dumpster fire. And so this may have legs tomorrow because you have a huge short position because everybody's waiting for it to blow up. And TAN, why this looks awful right now, you might want to watch this. We'll go through these pre-market tomorrow as well. And you have some other names that are going to come out tomorrow morning that you're going to want to be aware of, like RBLX, Uber, Baba. These all come out tomorrow morning. We'll cover them all tomorrow morning when we go live around 8:30. And we are shooting for 8:30. I say that. I know people will laugh, but yeah, we're really trying to shoot for 8:30 now. Now, this after hours. So apparently people are still using this. Revenue missed. DAUs are down. Monthly average users are down. This dropped like a stone, like an absolute stone. And this is what's so dangerous about trading after hours. And I mean, it really is, guys. Like, you have to realize how fast that you have to move here. When something does this, you just have to get out of the way. Okay? You can't play these games and go, I really hope this comes back, because you don't even know why it's doing what it's doing at the time. And all you did was pop, reverse, doji, break, and then that was it. You just sold down for the rest of the night. And it's been, you could have made some money here on the short side. I got some off, but it was very hard to get it off because it was just plummeting so fast. And I did get asked how I do this. So I'm going to walk you through something just so you understand how I'm doing this. People are like, well, how do you get in these trades so fast? One of the things I do, let's say that this is in free fall, I will put a level out there that it's not even trading at. So like, let's say that this is in free fall and I want to be in it. It's at 1650. I'll put a bid out there at like 16, and they're going to fill me wherever the next level is. If you know you want in or out, I strongly suggest you do that, because you're going to be pleasantly surprised where you get fills at. When I did this with Meta the other day, on that rip, just when Meta ripped here into this, some of the stock I got off into this rip by doing that. I got stock off at 408, 412, and all I was doing was looking at where it was and literally just raising the ask over and over again. Now, if you're not comfortable doing that, don't do it. But that's how I can get into these. If you're putting limits out there, you want to catch the momentum. That's the goal, is to catch the momentum, not to sit there and wait for the pullback and get in. No, you want to get in there while you have that positive slippage. That's how I tend to do that, so be aware of it. But let's get back to Snap. This was pretty much just a dumpster fire and probably the death knell for them. I don't see them coming back from it. And what it did was, it will do this because this is what happens. And this is where I can add value. What you'll see is pins get hit tomorrow on this, because pins always gets hit on this. All right. And then pins will come out, and it might have a good quarter, it might have a bad quarter, but it comes out Thursday night. So what you want to do, if you're interested, take a look at pins tomorrow. You'll also see Meta, for some godforsaken reason, will be down because Snap's down, which is just the silliest thing in the world. But this is what you're dealing with. I would say the names that are coming out that are beating the most, that you're seeing the most beats and that look the strongest across the board, are names like ELF. I don't know if we're going to continue to see these kinds of rallies persist. We have days and days of rallies, because you had Estee Lauder. That was this was a great report. And it seems to me that they're using these pops to sell. That does not mean that you're going to crater and come back down and we're going to have this big crash. I'm not having that conversation. I'm trying to get through tomorrow, right? That's all we're trying to do here. But if you know that this kind of pattern is there, where you're seeing selling after really good earnings, like take a look at Caterpillar, right? Same thing. Okay? They're using the earnings to sell stock. Now, they could be using that so that they can consolidate or raise cash, or they may have some concerns like I do. That's it.